The good and bad sides of cryptocurrency and cryptocurrency trading. When we look at the current digital era, a significant amount of 4.5 billion internet users flood the globe, with about 3.8 billion actively using social media and making online transactions. With this increased popularity and buzz in technology, cryptocurrencies has become one of the most popular investment options and most talked about assets in the digital era. But do we really understand what this term means? Cryptocurrency is a virtual or digital currency where decentralized systems establish financial transactions using cryptographic functions. Now, cryptocurrency trading works by buying or selling various digital coins and trading one for the other. So what's all the noise about these assets? Are there some striking merits or discouraging demerits to cryptocurrency? Let's find out in this video. These days, you almost cannot mention finances and not talk about cryptocurrencies. But still, many people wonder why it is important to use cryptocurrencies when their local currency work just okay for most transactions. There are many reasons why investing in these assets could be the right choice. Number 1, accessibility. Anyone with a smartphone or computer and a stable internet connection can use cryptocurrency. Compared to opening an account at a local financial institution, the process of creating a cryptocurrency wallet is exceptionally fast and easy with no ID verification or background check. Tell me, what could sound better than this? Cryptocurrency provides an avenue where the unbanked are able to reach financial services without the stress of going through a centralized authority. Because there are several reasons one may be reluctant to open a local bank account, this digital asset offers a means for people to make simple and fast transactions without the hassle of banking services. Number 2, security. This is where cryptocurrency wins. In traditional banking systems, it is easy for credit agencies to access reference documents of your entire transaction history every time that you complete a transaction, thereby invading your privacy. However, this is never the case in cryptocurrency and cryptocurrency trading. Unless someone else has the private key to your crypto wallet address, no one can make transactions or access your funds. That's not all. Crypto provides strict security for your assets due to its blockchain system and a distributed computing power network, making it even more secure. Hence, any attack launched on the network or an aim to alter the blockchain would need strong computing power to assert multiple blocks before the network establishes the ledger's accuracy. For famous blockchains like Bitcoin and Ethereum, such attacks are almost impossible. However, these are very common attacks in traditional banking and finance systems. Number 3, transaction speed and cost. One of the most common advantages of cryptocurrency and cryptocurrency trading is the incredible transaction speed. For most traditional financial institutions, it takes 4 to 7 working days before foreign transactions are completed. Wire transfer could also usually take 48 hours, and stock trades will take up to 3 days to settle in. Now, using cryptocurrency, transactions are completed in only a matter of a few minutes. Once the network confirms the transactions, the assets or funds are transferred almost immediately. The same technique goes for transaction cost, which is relatively low compared to other financial systems. For instance, it is very likely that once or twice you've looked up your monthly account statements and have been stunned at the ridiculous amount of charges that the bank imposed on your transactions. In addition, if you've been making numerous transactions throughout the month, that will cause an increased deduction of your funds just for charges. However, making transactions using cryptocurrency is less expensive. Although a high demand on the blockchain can raise the transaction cost, the charges are still way cheaper than bank charges, even on very busy blockchains. Number 4, privacy. As you would already know, creating a crypto wallet does not require any sort of personal information or specific details. Therefore, All transactions are solely anonymous, which means that your wallet address is your only form of identity on the blockchain. Number 5, transparency. There is a high level of transparency that cryptocurrency provides, meaning anyone that checks for transaction data can see the time at which the transaction was made and the amount of cash or asset transferred from a wallet. Hence, all transactions completed on the publicly distributed blockchain, which is aimed at reducing fraudulent operations and transactions. It's a common saying that everything has its pros and cons. That's right. The same theory goes for cryptocurrency and its trading. While the demerits of these digital assets may not be as vast, it's important to understand the risks involved and weigh both sides of the coin before venturing into its cause. After looking at the pros and benefits of this digital currency over traditional financial systems, can we still say the same after looking at its cons? Hang in there as we find out. Number 1, no proper awareness. This is the same reason you're watching this video, to learn more about the intricacies of cryptocurrency. Because if the topic had a great spread around the globe, then there wouldn't be wide information gap to fill. However, this is not the case. Cryptocurrency is one very complex concept to wrap one's head around it due to the many tweaks, curves, and bends that are involved in it. The industry is still relatively growing, meaning that the best experts in the field are only a handful. As a result of this ordeal, many have feared the risks of investing in a system they do not know much about. Number 2, it is not generally accepted. Yes, cryptocurrency is one of the best technologies to have ever happened, yet it has not been legalized in every country around the world. Mostly because not everyone has been able to grasp its full potential and functionality, and there's still a growing knowledge about its depths. Many countries like Korea, Russia, Egypt, Algeria, Qatar, and others have placed a ban on all kinds of cryptocurrencies and its trading due to its unregulated nature. As a result, any form of trading using this digital asset is highly prohibited in these countries. More interestingly, even in countries that have legalized its operations, legal restrictions are still put in place, limiting its use for trading or any form of payment. Also, banking systems and other financial institutions are banned from trading and exchanging cryptocurrencies. A list of these countries are China, Hong Kong, Turkey, and Saudi Arabia, among others. Number 3, no recovery of account. Because cryptocurrency is a virtual asset or currency, therefore it cannot be seen or touched. Although funds and assets are secured in one's wallet, there is still a challenge it faces, which has to do with the loss of one's private key or password. If by any chance a user forgets his crypto password or account details, there is absolutely no way to get it back. As a result, all the data is lost and erased, with no means of retrieval due to the strict integration of encrypted blockchain technology and its tight security. On the other hand, there is also a no reverse payment policy. Simply put, once you make a transfer or payment, it cannot be reversed. This also means that if you mistakenly make a transaction and the second party does not agree to a refund, then you can do nothing but feel sorry for yourself. Number 4, scalability. You'll find that scaling issues are one of the biggest concerns with cryptocurrencies. In spite of the rapid growth of digital coins and their adoption, Visa processes many more transactions than digital coins do every day. The speed of transaction is another crucial point where cryptocurrency cannot compete with companies such as MasterCard and Visa unless their infrastructure is massively scaled. A transition of this magnitude is complex, difficult, and certainly not seamless. Fortunately, many have proposed alternate solutions like Lightning networks, stacking, and sharding, and these are likely to address scalability problems. Number 5, high volatile rate. This is another major problem facing cryptocurrency digital assets. Unlike other currencies, Cryptocurrency has a high level of uncertainty in the finance market, which scares many traders and investors from entering the industry. Let's take, for example, in 2018, cryptocurrency experienced a very rocky and unstable margin, so much so that the economists Warren Buffett and Nouriel Roubini characterized the system as a bubble. Nevertheless, the popularity of the technology is thriving and increasing every day, with million-dollar companies like Microsoft and Starbucks embracing its potential. Still, some uncertainties remain, and one way to reduce the cons and increase the pros is to increase the adoption of its operations and the confidence of investors and traders. However, for this to happen, major disadvantages like irreversible transactions, no recovery of accounts, and scam activities should be thoroughly dealt with. And that's it, folks. What do you think could be another outstanding demerits of investing or trading with cryptocurrency? Would you encourage anyone to follow the hot trend of buying or selling these digital assets? We'd love to hear from you in the comments. Don't forget to like this video and subscribe to our channel. Thanks for watching and see you next time.